Hi guys, I hope you are well. I wanted to come online for you today and do a breakdown of how I would look at the markets in the form of a top-down analysis, because this is where a lot of people do get confused, and a top-down analysis doesn't need to be confusing. It doesn't need to be overcomplicated. It is really about keeping things as simple as possible. So I'm just going to show you how I would essentially just approach the markets, how I would navigate my way from the higher time frames to the smaller time frames and potentially look for some form of entry. So what you're going to see straight away is on this particular pair, this is the DXY. I'm on a higher time frame, and I'm on actually a 3-month time frame here. Now, a lot of you may not have considered higher time frames. I bet a lot of you would even start on potentially a 1-hour time frame. The problem with a 1-hour time frame and a 15-minute time frame, even a 4-hour time frame, is that you're not going to get the substance and the correct bias that you actually need in order to find the overall direction in the market. So I always start from a higher time frame just to really gauge an overall picture of where I see this thing going long term. Now, in this example, if I'm potentially bullish on a 3-month time frame, there's every chance I'm going to be looking for bearish price action at some point along the line, but we can use these higher time frames for targets as well as directional bias. So I like to start on a higher time frame just to get an overall picture of where I see things going. And as I look at this here on a 3-month time frame, the first thing I can see is that we've spent really since July 2022, when we made this high here, we've spent since then pushing all the way down, and essentially we've started at the start of this year 2024, we started pushing higher, which is this candle here, this candle here. They represent 3-month candles. Now, the quarter that ended last year is this candle right here. You can now see that it was pushing into this fair value gap right here. And as you can see, price is now starting to push out of that fair value gap. So there's every likelihood that we're looking to push towards this new high. So that would be really my immediate target, and I'm targeting there because it's the closest port of liquidity. Long-term projects, obviously I see price essentially taking that area of liquidity out there, and even further we could potentially look to make our way to all-time highs, but that's whatever goes on up here is generally not my concern. I'm looking at the closest thing, and what I can see is that price has been pushing all the way up here since really 2008. We've been bullish, as you can see here. We've been coming back down. We obviously took a massive drop to the downside from 2002. Now we're pushing to the upside, and we're currently inside this bullish fair value gap, sell side inefficiency, and we're currently showing a positive reaction coming out of it. So if you're asking me where do I think this is likely to head on the highest of time frames, I'm saying a bullish at this moment in time. Okay, so that's the way I would kind of navigate my way to the upside from there. Now, when we look at this on a smaller time frame, just going on to a monthly time frame there, you can see price is a lot choppier. And what you can actually see is it looks, with a lot more candles, it starts to look a little bit more complicating. Because if you go back onto a 3-month time frame, it looks a lot more simplistic to follow. But now on a monthly time frame, you can see price is pushing from this institutional order block right here. Price did come lower, but it's very important to understand that we did respect this other imbalance here. That is a buy side imbalance. So we are still rejecting to the upside from here. We can see that we have respected this wick, which is the main bulk of sweeping into this imbalance here. You can also see that price swept these lows. The candles did not close below these candles here, and then it pushed higher. Now these candles did come lower, but we came into this imbalance on a smaller time frame. Wick. I apologize for that. But if you look at this here, the candles came into this wick. And if I actually measure these fibs, I wouldn't mind betting they're probably within 50%. Yeah, you can see there, we've literally tapped 50% of that wick, which is equilibrium. So price has come into 50% of that wick and started reacting higher. There's probably some sort of fair value gap or an order block or something like that within this wick on a smaller time frame as well. Price is pushing higher. It's looking to target that liquidity here, and potentially we could reject because we're inside this sell side imbalance. But at this moment in time, this is still my first target. I want to see price reject from this higher imbalance, from this weekly imbalance, 3-month imbalance that we've got here, and I want to see it push higher. Now, this is the good stuff, because when I come into my weekly area, we can see this a lot more clearly now. So already from a 3-month time frame all the way to a weekly time frame, which is where I always want to try and navigate my direction in, I'm in line with the higher time frames in absolutely everything I'm doing. Because you can see here, this is a weekly expansion to the upside. And if we measure this entire range that was created on here, we can see the price is into this OTE level here. Now, I can use that as an extra piece of confirmation that we have reacted from this area and we are pushing to the upside, potentially looking to target this liquidity right here. Another thing to note as well, that we are within this area of imbalance right there, as well as reacting from this order block right here, which is still going to be in your discount level, and that there swept these lows, which you can see a lot more clearly on a smaller time frame. So we've gone from a 3-month time frame where we've identified this bigger imbalance, to a monthly time frame where we've identified the smaller imbalance, to a weekly time frame where we've identified a trading range where we've reacted at our OTE, optimal trade entry levels, and also we've reacted from an area of imbalance after we have swept liquidity. So we're now starting to navigate our way towards what we would hope for is bullish price action. And if we sweep even lower into this thing here, just move this here, you can start to see that as you follow this expansion higher, we have been respecting imbalances. We are currently working out of this imbalance here. Now, the candles have more or less closed under these areas, but we are rejecting to the upside now. Price came all the way down into this, pretty much into this order block right here, and we are starting to push higher and reject. So I'm still looking to target this area right here. So what I'm looking for now is a smaller time frame narrative towards bullish moves. And when we look at a daily time frame, we can start to see that price came down all the way into this imbalance here. Now, a typical ICT trader might call this a breakaway gap, which means it should be left, but you can see prices come all the way down. And again, if we measure this area of imbalance, measure this range, we can see price came back into this OTE level here, which is your 71% to 88.6% right there. They're the levels I personally use. And then price is now starting to reject to the upside. We've completely respected this daily imbalance as well. So the target here at the moment would be this liquidity, which is being formed relative equal highs. That's the first target. We've then got this 3-month and monthly and weekly target, which is liquidity. So I am being very, very patient right now, and I'm going to wait for potential opportunities to try and follow this to the upside. I would personally like to see this candle here close whereabouts it is and create for us this imbalance. Because if price can then come back into, maybe next week, into this imbalance and force its way higher, that would give me a better narrative behind bullish moves. So I have to be a little bit patient in this, and I'm potentially going to go to a smaller time frame. You can see here we've started to react. We've started to create these areas of imbalance. We're actually currently inside this imbalance here as we speak. So now it's a case of potentially looking for entries, looking for ways to navigate ourselves in the market. You can see here price rejected and then came back. That potentially could have been an entry. Price is pushed higher. Maybe you were looking inside this imbalance, but price never got there. That could be something you could potentially wait for as your point of interest area. Or perhaps you're looking inside this area of imbalance. But one thing you have to consider is that on a higher time frame, we are expanding and we are going to retrace at some point. So on a smaller time frame, what I'd be potentially waiting for is for price to come back into one of these areas and give me a smaller time frame break to the upside, maybe on a 1-hour time frame or a 15-minute time frame or something like that, within a kill zone, within the New York session or the London session, and within an OTE level area. That is how I frame my top-down analysis. And what one thing you can probably notice is that I'm not even looking at a 15-minute time frame at this moment in time. Anything from below the 4 hour is where I'm specifically hunting entries. At the moment, we're not in an area. We're not really in an area where I want to see things happen. So what I'm looking to navigate now is, and I'm just going to put it up right now, is I'm just going to look and see what's happening with the news. We can see here today is Wednesday. Now, there's no USD news, and this is the reason I'm looking at USD news is because we're working from the DXY. But when I look at tomorrow, we've got USD red folder news at the start of the New York session. And then again on Friday, we've got USD news. Now, if we look ahead to the week after, nothing on Monday, but we don't really like trading Monday. We've got USD news Tuesday, a lot of USD news Wednesday, Thursday more USD news, and even more on Friday, which is potentially going to set us up for a lot of volatility. So if you go to a smaller time frame and you start seeing consolidation and slow moving price action like this here, just know that that's probably going to come to an end next week, and we're waiting for moves to the upside. Now, the key thing to understand here is that if I am bullish out of this area here, that would mean that because this is the DXY, I would be on Euro USD looking for bearish moves. So essentially my target is going to be right here. One thing you have to understand that this is about mastering the art of patience. I'm trying to keep things as simple as possible. I'm not overcomplicating the process, and I want you guys to try and do the same thing. So give it a go. Delete everything that you see so far and just start again on a higher time frame. And just remember, try and look for where the money is, which is liquidity. Try and look for where price is in drawdown. Try and look for where price is potentially going to be drawn towards. But the key thing you have to understand and remember is that the market will rebalance into areas of inefficient price action, and price will seek to target areas of liquidity, which can be seen in the form of highs and lows. Should price completely dump to the downside and violate this imbalance, then there's every chance we react out of this imbalance here and potentially look to head towards that liquidity here. But that hasn't happened yet. We are currently respecting buy-side imbalance. So until that area is violated, I'm going to take the stance of looking for bullish moves. Hopefully you've found this video insightful. Hopefully I've been able to clear up how to do a very simple top-down analysis. And I will see you guys on the next one.